goes, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Wednesday afternoon, the 25th of March. I'm Nadine Blaney, and it is my pleasure to be here with you on a day that we are seeing some green on the screen. So it's pretty incredible. There is so much going on out there. Still, and I'll get you through it in just a moment, a lot of unknowns to do with the war in the Middle East. But our local market, and in fact markets around the region, have taken a little bit of good news that's come through, a little bit of positivity, and really, well, you got to say, is run with it. So that's a look at the CIBO Australia Index. The S&P ASX 200 is up by 1.8% to 8,529. I'll check in with that just as the last of the day's trades go through. But around the region, we're also seeing positivity. So we've got the Topix in Japan up by 2.6%. We've got the composite in China up by 0.8%. The KOSPI up by 2%. So bit of positivity, and we really saw the turn this morning when we saw Australian futures rising, US futures rising. We had some news that there has been some sort of a 15-point peace plan put to the Iranians by the US President Donald Trump. Still, though, today Israel continues to strike Iran as the US President says that US is negotiating to end the war. Sources, though, saying that the U.S. is expected to send thousands more soldiers to the Middle East, so those so-called boots on the ground. Iran has told the UN that non-hostile ships can transit the Strait of Hormuz. Drone attacks have hit a fuel tank at the Kuwaiti International Airport, causing a fire. Oil prices today on that hint of good news and resolution, some sort of peace talks. Again, we're not very clear on what is happening, what's been proposed, and if the Iranians are even really engaging. But it was enough to send oil prices down around 4% on the day today. So those are the key themes. I mean, Tehran talks. We will find out more potentially through the overnight period. But this rally appears to have legs because don't forget that we did see the market, this local market at least, gained some ground yesterday as well. It was a negative session on Wall Street overnight. Software stocks were hit particularly hard. But here today, a real relief rally, and as I said, extending around the region. And don't forget, we did have that inflation read at 11:30. So for the month of February, inflation did come in at 3.3%, slightly lower than had been forecast. However, I mean, just for example, one read coming from HSBC's chief economist, Paul Bloxham in Australia, who we speak with regularly, saying that it's still, way outside the RBA's 2 to 3% target band, and coming, of course, before we have seen this real oil price spike. And, we're hearing and we're seeing ourselves. I mean, I saw it myself. Some fuel stations around even the Sydney area don't have any fuel to sell. So pretty worrying signs here locally with that strategic reserve being run down pretty quickly. Okay, so what sectors benefited on a day that we are seeing some positivity? Let's look no further than the miners. BHP up by close to 3%. Bit of news with Rio Tinto that I'll get you across. It was actually the laggard. PLS in the lithium space, we had that trade deal negotiated and signed between Europe and Australia. So lithium covered there as well as critical minerals. And we saw Iluka up by close to 9%. Energy, well, this is where we saw the cream sort of coming off the top. Karoon Energy, it's the stock of the day. I'll get you across that later. Woodside, Santos, and Yancoal all in the doldrums, but we saw a big uptick in Paladin Energy. I hosted the call today. It was good to be back in the chair, and we had a good conversation about uranium. So you might want to watch that when you're done watching or listening to this podcast. Of course, you can access the call by our website, our app, 7 Plus, as well as, of course, podcast form, wherever you find your podcasts. Consumer stocks, I had a good chat with James Garish. He is from Market Matters a little bit earlier on today. You can take a look at that online. And James was naming some of those consumer stocks that he thinks potentially have bottomed out. Here's a look at some of those consumer stocks. We did have a broker note for Light & Wonder, sending its shares higher by 5.5%. Well, I said Rio had some news. It secured the long-term future of its Boyne aluminium shelter. So $2 billion from who? Well, us, taxpayers, got a funding deal with the Queensland and federal government. So it's going to go green, apparently. Nickel industry rose on getting approval for ore sales in Indonesia. APA Group, it completed the sale of its 20% stake in All Gas Network to Stone Peak. And Macmahon has risen. Shares are up on a deal to restart mining operations at a silver project. And Pepper Money, also a bit of a rally. It seesawed initially, but ending pretty solid 4.5% higher after rejecting that $1 billion takeover bid from Challenger. So let's be joined by Kai Chen from MPC Markets to make sense of it all. Now, Kai, nice to see you.
Yeah, very good.
So very good. Is this day very good? I mean, like it's good to see the green on the screen, but you got to wonder if it's going to be long lasting.
Oh, there's a lot going on and a lot to digest as well. And, going through the reel, we're basically, we're not too sure what is right and what is wrong. Basically the US administration is talking to a person. There is a president and 15 points. So, we are hearing rumors that Jaden Vance is also getting involved in the negotiations as well. It'd be interesting to kind of see what develops and what comes out in the next couple of days. But I think the market is trying to do a bit of a relief rally. People who's profited off oil in that trade, been taking a bit of profit. A lot of the stocks have been beaten down. So, we are seeing a bit of recovery at the moment. But really, I think the big story is inflation. Obviously we saw the figure come up today a little bit lower than expected, but it's for the period prior to all this happening.
Well, that's the thing. I mean, even if we put the war in the Middle East to one side, it is inflation that is the big concern. And then you overlay war in the Middle East, and it's not just oil, it's fertilizer, it's other critical, pieces of the puzzle to help global growth going. I mean, even if we saw this 15-point plan quickly checked off by this person in Iran that the administration is apparently talking to, I mean, you've got to think that these inflationary pressures, the pulse will still continue.
Absolutely, you're exactly right. In terms of the fertilizer comes out of the Middle East, it's about 30% of urea that actually transitions out of the Strait of Hormuz. So, and basically for farmers, the cost is just going up substantially, and most likely it will be passed on to the consumers. Logistics as well. We're seeing a lot of these trucking companies really struggling because the cost of fuel is so high. It'll be interesting to kind of see what happens. I think, obviously if the war is prolonged, the larger the effect. But I think even now, if they would come out with a peace plan, there would be substantial amount of inflation to come out of this. And, I think Jim Chalmers is basically flagging that as well, and it's putting a bit of pressure on the budget.
Yeah, the budget is coming up on May the 12th. Obviously nothing can be set in stone now because there's still so many unknowns. But I will say that I had a number of conversations today, people starting to look at where potentially there are some, good opportunities right now. Is that the phase that you're in, or you're still sitting on some cash?
Oh, absolutely. I think, we're not really going super aggressive in buying the dip, but there are definitely pockets of opportunity that are mispriced, we think. Gold and silver is a very obvious one in our opinion that, basically it's been sold off in a risk event. But if inflation is the story, I think it does have a big part to playing in it. Comparing to history, that's always been the case in inflationary periods. These precious metals do fairly well until the rate goes, the rate lags behind. The metals usually fall off before the interest rates peak as well. The other interesting opportunity is actually, I was looking at this today, electric vehicles and lithium. And, we're seeing basically lithium stocks really bounce hard out of this. I was watching an interview and basically there was a guy at a dealership saying that they've had a four times increase in terms of demand for EV, and it's makes a bit of sense. Yeah. People are seeing the fuel crisis and going, hold on a second, is it more worthwhile to transition to EV? So I think there's going to be a lot of demand globally for electric vehicles and that lithium play as well.
Yeah, it's incredible. I was speaking with a neighbor and said, "Oh, you must be feeling pretty good with your EV right now." And he said, "Yeah, also diversifying my risk. So it could be oil. Now it might be electricity or high power prices, you know, in the future." So they're lucky to have both ICE and an EV. So it's just such a dynamic environment. When you are thinking as well about where we can find some opportunities in going for growth, like the concern before this war was AI, an overspend potentially on AI, how we're going to finance what's going on with AI, where the power is going to come from for AI. So do you think that you know, is still a concern for the market? And if we did remove this war, that would again surface?
Yeah, you know, it's a very interesting question. It does definitely put a bit of a spanner in the work for AI. I mean, the power cost will go up, and also, you know, constraints in terms of the economy. You know, there's going to be less spending to come out of this with all the cost of living crisis across the world. So yeah, I mean, and funding costs going up as well. You know, potentially with more interest rates hike coming along. So I think, yeah, it does definitely put a damper on that thematic. However, you know, I think research in the AI industry will still push ahead as it would. I just think that it might take a bit longer for the story to play out.
Okay, so have you guys been very active? Now I know you mentioned gold and silver, and I think it was your colleague that put out a cartoon this morning showing people lining up when gold was at 5,500 and one guy in line at levels that it's sitting at right now. So is that where you see the real upside?
The contrarian standing there by himself. Yeah, no, I do think we've been finding alternative assets to play this. So, you know, we're actually launching a campaign in terms of leverage play on gold and silver. It's a very interesting way to do it. You know, you can there's many ways to play it. You know, you can buy gold ETFs, you can buy gold stocks, or, you know, there's some other alternative structures and assets that you can actually play through with. So for the moment, we're choosing the upside, where the down, you know.
There we go.
Yeah. He looks pretty lonely out there.
I thought that was great. Oh, I'm glad we got it.
But you know, we're fairly bullish still in the medium term. None of the underlying thematic has changed on that.
No, and if inflation is still an issue, which it is,
yeah,
was before this oil price hike.
Oh gosh, yeah.
So yeah, all right. So and just for those of you who do subscribe to our COB newsletter, I think that Mark Gardner, your colleague, did write about your view on gold and silver, and there's a link in yesterday's newsletter if you want to go back into your inbox and try to find it, that you can click on a link and actually get some of that research and figure out what you guys are doing there. So you're welcome for that plug, but thanks for that in the newsletter as well. Okay, so tonight it's all about headlines, isn't it? Like it's sort of one of those phases that, we have the NAB business survey tomorrow, or I think it is the business survey. No, it might be the quarterly survey. I'm not sure. Apologies, people. But it's one of those sort of situations where it doesn't actually matter. Like the data is taking a back seat to what's coming out in headlines. Yeah,
absolutely. I think there's too many global major headlines to come out, and you know, in terms of the domestic second tier data, I would put it. You know, I think it's taking a little back seat for the moment. I think really where everyone is watching is basically what's happening on the ground in the Middle East, of course, because there's a lot of contradictory information coming out. Basically, there's another 1,500 troops that's been sent to the Middle East. Iran and Israel are still firing rockets at each other. So, you know, I think the US wants a de-escalation in the situation.
Oh, yeah.
But is it really possible in a short time scale to actually de-escalate? You know, will there be demand? You know, I think obviously Iran's trying to extract some of its goals out of it. Can they meet in the middle and negotiate a deal? So.
Yeah, well, we're told it was all about nuclear capabilities, so we'll see where we're at with that. Okay. So good chat, lots of unknowns, lots of uncertainty. We'll all wake up in the morning with new headlines. And as we've proven today, you know, our local market can go its own way, despite what happens on Wall Street, if the news flow sort of supports any type of risk optimism. All right, Kai Chen, always a pleasure. Thanks so much for joining us.
Likewise, thank you.
So yeah, if you don't subscribe to our COB newsletter, you're really missing out. We wrap the market. We have links to a few of the key interviews from the day. There's a catch up with the call, but there's also daily a view that is written by some of our amazing expert guests. So that's what we were talking about when we were talking about what Mark Gardner had put in the newsletter yesterday. You can sign up for that newsletter at ausbiz.co/newsletters. So let's get across the stock of the day. We had a short special on the call today. The stock of the day, though, was Karoon, and I spoke with Michael Gable from Fairmont Equities and Philip Pepe from Shaw Partners.
We'll get to a point, and we're starting to see that, where we feel as if the war is winding down or coming to an end, or however you want to call it. And in the short term, you'll get a pullback in the oil price. So we saw a bit of that last night. That might occur over the next few days as well. We're seeing a drop in the share price of Karoon. Whether that drops for another couple of days or not, I'm not really sure. But ultimately, I'd be using that weakness, if you like Karoon, as a buying opportunity. Yes, you could pick some up today, and I think you'll still be making money in a few months' time. So whether you want to finesse it over the next few days and try to get a cheaper price or not, that's up to our viewers. But ultimately, yes, Karoon is a buy. I think it'll be much higher later in the year.
So what we've learned is, in the short term, the energy producers will make supernormal profits, and that's great. In the medium term, we need more infrastructure, and that's good for the providers of the infrastructure, or those who support the infrastructure. So think second order effects. Who will benefit from the high oil price and from what's happening? And that's those who service Karoon and Woodside and all the other energy providers. And one of the companies I cover, give you a bonus buy, Duratec, DUR, asset maintenance company who does a lot of work in defence. Their fastest growing segment before this month was energy. It's gone from 0 to 12 to 14% of their revenue. And unfortunately, or fortunately, what's happened in the last 2 weeks is great for their customers and great for them. So if you want to play energy, play those who service the energy market. A company like Duratec that I cover, sell Karoon, buy Duratec, play the energy service providers, not the pure play energy companies, because that oil price is coming down at some stage.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's get across some of the market leaders today on this positive Wednesday. Drone Shield, with all of the unrest, no big surprise. We're still seeing this one make some pretty good gains. Let me just check if there's any news that I may have missed. We've got Drone Shield up by 17% and $4.22. We had some substantial buying in the company today. Silex Systems in the uranium/nuclear space, Vulcan Energy, Bellevue Gold, and Paladin. Paladin up by close to 11%. Now, those that were lagging the market, being the stock of the day, Karoon Energy down by 7%, New Hope Beach, there's a theme there, Energy, Endeavour, and Whitehaven Coal. Atlas Arteria, just one of the worst performers as well, but it's been trading ex-dividend. There's a whole heap of ex-div companies that will be paying out dividends coming up, and so we'll see, will we see some of that money returning to the market? I had a good chat with Jack Stickley from Morgans a little earlier on. You can take a look at that. Amplia Therapeutics out with an announcement today, up 33%. So was Fortify AI. It was up by 20%. Flipping the page to see the laggards in the small to mid cap space, and really lagging the market was Serco, down by 14% to $1.20. Also, Aurora Biosurgery down by 5% to 56 cents a piece. So what's on overnight? UK inflation for February. We're expecting growth to be stable at about 3% year on year. We also hear from the ECB President Christine Lagarde. She's speaking at the ECB Watchers Conference. I murdered this earlier, but yes, we have NAB's quarterly business confidence survey coming through tomorrow, so second tier data. Earnings coming from Seoul Pats, and we have the PPI in Japan. So let's take a look at the final figures for this market. We've got the CBO closing up by 1.5%. The S&P ASX 200 up by 1.85% to 8,534. Positivity for the most part around the region. I can see this Hang Seng has just slipped in to negative territory, but E-minis, so futures in the U.S. still positive. We've got S&P 500 up by 0.75% with NASDAQ up by close to 1%. Brent crude is down by more than 4% now, close to 5%. WTI also much, much lower on news that we could have some sort of negotiation happening between the United States and Iran. Let's hope we see some sort of a resolution to this war in the Middle East, although I do say it comes as Israel continues to bomb Iran. Very much a headline-driven market, very touchy sentiment. We've got a whole heap of content online if you'd like to go and catch up with anything. Plenty of people saying what they'll be buying in this sell-off. I know that it was positive today, but still a lot of cream has come off the top of, as I had said. And a lot of analysis as to what might happen if we see a prolonged closure of the Strait of Hormuz. So thanks for watching today. We look forward to seeing you tomorrow. And please do tell your friends about AusBiz. The more the merrier. Stay with us.